So yes, Alibaba has lost all its gains once again. So for those of you who have been diamond handing onto Alibaba, sad to say, in the latest news and the latest breakthrough headlines around Alibaba is that they're going to split up their main business into 6 sub-business units. And upon the announcement, Alibaba actually surged by more than 10%, and I think at its recent highs, it was trading above $100. And today, in the pre-market, it's actually trading much closer to sub-90 or even mid-85s. So now, what exactly does it mean for Alibaba shareholders? To not waste your time, I'm just going to tell you, it doesn't mean anything. So in this video, I'm going to push the limits of the iPhone and essentially the AirPods here, because I know it's extremely grainy, it's going to be extremely pixelated, but I honestly just had this thought recently and I just wanted to document it down. So for those of you that are not new here, you know the drill, just help me gently click that cute little like button. But anyway, back to the topic on Alibaba, why is it such a greatly traded stock? Essentially, everybody is just trading around the news of China, the US-China relationship, what's gonna happen in the politics of China, how they're playing around with the crackdowns, especially in the tech industry. So that's generally why there is so much interest. And to be very honest, if you just look into YouTube or any search engine, Alibaba is probably one of the highest ranked search items, which is why a lot of people, or there's a lot of retail interest around it, because naturally speaking, a lot of retail investors love the quick in and out and to profit from that small movements in the stock price itself. So likewise, there's a lot of speculation, there's a lot of volatility, a lot of movement around the stock. So I think there is a few cheeky remarks that I've seen in my comment section down below. They say that they don't even need to check the stock price of Alibaba because they just have to click into my video, and based on the tonality of how I speak in my video, you probably know whether Alibaba is up or down. So I do hope that I sound jovial enough, even though Alibaba has essentially lost most, if not all of its gains post the entire breakout announcement. So now, I think just to really look into the entire perspective of Alibaba, for a long time Alibaba shareholder like myself, I just have to reply, first time, it's really not the first time that Alibaba is experiencing such huge amount of volatility. And I know that there are a lot of trader friends out there, they have dropped me a text saying that, hey Chee-Keng, you see, you missed out on a good opportune time to basically trade in and out of Alibaba again. Because if you were to really plot the technical charts of Alibaba, you can really see very, very clear support and resistance line. And the whole band is really around this 80 to 100, 110 range. So within this range, I think Alibaba managed to bounce at least a good 3 to 4 times. And for those of you who managed to catch it and managed to profit from this 3 or 4 movement, 2 thumbs up to you. If you don't give me the like button, I'm gonna give you the like button instead. But anyhow, I think really this idea of investing or trading, it's a personal endeavor. I'm not gonna tell you that investing is the correct way to go. For those of you who manage to trade in and out of Alibaba specifically, I'm extremely happy for you. But I'd just like to say that in this entire band itself, it will work until it wouldn't. So you just have to be sure of your own stop loss and what's your trading strategy. But I'm not going to say that it's not a good strategy in totality. However, for myself, I've actually been in the position for more than 2 years now. Yeah, it's more than 2 years now. So honestly, this $10, $20 up and down, it doesn't really affect me at all. And I think my portfolio, the biggest drawdown that is experienced is more than 50%. Was I affected? Probably. Was I able to sleep well at night? Yes, I wasn't really extremely affected by the position as well. So I think those are just the different perspectives and the different strategies that people employ. So honestly, I don't really see an issue. You like the way you invest, then carry on. I'm not gonna force my way through. But the entire idea of trading is you need to know what you're essentially doing. So that's basically the difference. And now, I think I also wanted to kind of correct, I wouldn't say correct, but just to provide a different perspective, especially for those of you who have kind of a biased opinion towards Chinese stocks. So everybody will be thinking, oh, China stocks are uninvestable, the entire universe of Chinese equities cannot be invested. Oh, don't touch the Chinese market because the CCP this, the CCP that, etc, etc. But I think to just erase or maybe to bring in a new perspective, to be very, very honest, if you were to look at the entire universe of Chinese equities, the most beaten down in recent times, and by recent times, I mean the last 2 years, was really the entire tech industry. Let's take away like EdTech because those were really a kind of special situation in this case. But when I really went down and I just googled, give me the rankings of the biggest Chinese market cap weighted, and I just go through the top 20 list, I actually just do a quick Google search. You don't have to quote me on this, just do your own Google search. I will just have to exclude banks or financial companies in this case because you can't really use the PE multiple, because for many of these sort of companies you probably want to use a price to book. But when I do a comparison of the top 20 companies, I'll just give you a few quotations, by the way. Do go and fact check me. So a liquor company, two liquor companies in fact, Maotai is trading at a PE of 34, Wu Liangye is trading at a PE of 25. CATL, which is the battery manufacturer, is trading at a 25 PE. BYD is trading at 44. And then Li Ning and Anta, they are not the top 20, but they are also reputable Chinese consumer goods brand. Li Ning is at 32, Anta is at 31. Yum China, the one that holds a whole conglomerate of different food-related brands, is trading at a PE of 60. So then, I want to ask you, and I give you these numbers, and then now you tell me, are Chinese companies really all that cheap and really all that uninvestable? If they're really very, very uninvestable, who is still holding on to these companies, and why are their PE still trading at such a rich valuation? And to me, when I look at all these PE like 25, 30, 44, 60, to me these are all rich multiples and rich valuations, by the way. So who exactly is the dumb investors holding on to these stocks? So I'll just like to introduce a different perspective. Yes, I know that many of these tech companies today, especially if they're traded in the US exchange, they're unfairly beaten down. And yes, I use the word very cautiously, unfairly beaten down, because I still think that there's a lot of value to be extracted here, and which is why I remain overweight and extremely bullish into the entire Chinese tech sector. But of course, who am I to judge? We'll see how the market play out. But I do believe that in the long term, it's going to be a weighing machine. If the company can continue to compound and continue to be able to execute. And I think I just wanted to introduce a lesson here, something that I took away from Warren Buffett's recent interview with CNBC. So I'm not too sure whether you guys have watched my previous video where I said that Buffett essentially schooled me. So for those of you who don't know, Buffett has entered into a Japanese position. I think a few years back in 2020, he bought the 5 biggest trading house in Japan. And then I think they all have greatly appreciated by around 50 to 100%. So here backs the question. I think for non-novice investors, for those of you who have been investing for quite a few years, many people on the sidelines have been telling you, oh, don't invest in Japan. Japan experienced a lost decade. Actually, in fact, it experienced a three lost decades. I think 30 years ago, the stock still hasn't achieved its all-time highs. And then our good old Warren Buffett here, the Oracle of Omaha, doesn't really care. Who cares about whether the Japanese market experienced a lost decade or 2 or 3? He just goes in, he saw value, he extracted value, and stock price essentially went up as well. And he managed to extract the value from these different positions. So here comes the question. I think at the end of the day, the fundamentals of stock and the fundamentals of equity investing is still the same. You just need to focus on 2 things: profits and cash flows. Who cares whether what kind of political discount, premium, the population is going to collapse? Those are all the same narratives for Japanese companies and the Japanese stock market. But guess who made money at the end of the day? So that's just some different perspectives. I'm not saying that all these different Chinese companies will definitely recover. I'm not alluding to that fact, but I'm just saying that if you're to extrapolate and to really draw the conclusions yourself, that does seem like a pretty I guess plausible conclusion. But who knows? Let's wait for the next 5 to 10 years. If not, hope you guys enjoyed the discussion. I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!